Hey there, just wanted to give you a quick market update where we are so far. This morning the market's down and it went into negative territory, so the market's down so far for the year. I know it's a little confusing. You don't see many headlines. There aren't any big drops. We all feel like we should be doing better because a couple of sectors are doing well. Apple's done well. A couple of technology sectors, biotech have done well. But the overall market itself is not having a great year so far. And it's a little confusing when we look at our statements and say, gee, I should have done better than this. And no, the market's not doing great and our portfolios aren't doing well. It's just been sort of a lousy year so far. The summer doldrums have set in. The big thing right now is the pre-earnings nap. I talk about this every quarter. We're within 30 days of earnings. So when you get within 30 days of earnings, you fall within what's called the blackout period. Companies cannot talk about their stock. It's radio silence. Companies just can't talk about their stock. So what happens is everybody focuses, for the traders, for the market, for individual investors, we all focus on headlines. Headlines are never pretty. You had ISIS last year, which caused it to go down. We had Ebola last year, which caused it to go down. Right now, we're looking at any of the negatives that could possibly come up. We're looking at possible interest rate rise, which even if they do raise rates, it's going to be so minuscule it won't have any effect. The dollar has gotten stronger, but again, not much more since the last quarter. There's really no negative news out there, but there's no positive news for people to focus on. So it causes institutional traders to sort of create liquidity to sell in the event that earnings are worse than normal. And it always, at the beginning of earnings season, you always have the fear that earnings are never going to be as good as expected. However, almost every quarter since the crisis, earnings have exceeded expectation and the market has gone up a lot once earnings start. So I expect the same situation the next 2-3 weeks to sort of bounce around, not be pretty. Once earnings start, I believe earnings will be better than expected because earnings disappointments have already been announced. The market will do better then. It'll probably be a lull through the summer. I expect the fourth quarter to be pretty good, though. I do think that earnings are picking up steam, and I think the lower oil prices are going to help the consumer. I think interest rates are going to stay low. I don't really see the Fed raising, certainly not in the next meeting. I'd be surprised if they raise it at all this year because the economy as a whole is not booming by any means. We're having some pockets of strength, skilled workers, but there's no inflation, there's no wage growth, and I don't see any inflationary pressure. So I'd be surprised if the Fed did raise rates. And even if they did, it would be just to get them off zero, not because they see a drastic inflationary risk to it whatsoever. So long story short, going to be, typical summer, little up, little down, better than staying in cash. Good fourth quarter. Earnings should be better than expected, which should give us new highs in the fourth quarter. Always cautious. I do think there's a very good possibility of a recession next year. Sometime the mid to late 2016, we're just due, which could cause, well, that could be when interest rates do rise. It could cause real estate to really pull back. Stocks could have a little bit more of a correction. We hopefully and intend on being ahead of this, and so we don't take the brunt of the hit of the market. Always, invest for need, not for greed. Always trying to get the best returns we can based on what you need, but with the least risk possible. That's the best thing. It's what we do for our clients every day. So sort of just cautiously optimistic. Should have been able to say that a little bit better. So other than that, if you need anything whatsoever, give me a call. If you have any questions, email me, call me. I'm here for you. Watching the market, watching the accounts closely every single day. And of course, it all starts with the planning. So make sure we're doing the proper planning for retirement. That's where it all comes down to. Thank you, and let me know if I can help.